Welcome again to the second episode of the Trading Forex Scanner Masterclass. In the first episode, I just gave you a brief overview of the different components of the pilot window here. In this second episode, I will go through the charts and have a look at the different components of the technical analysis using price action, correlation, and multi-time frame analysis. Let's get started. We have actually a very exciting example here, since we have a yen that is strong across the board, oscillating between 6.5 and 7. So if I click here on any currency, you will see that all the major pairs of that particular currency are going to show here. So I am here on the yen, that's why it's on yellow. But if I go to Australian and I click here, as you can see, immediately all the pairs are now Australian pairs, all the major ones, Australian Swiss, New Zealand, Euro, AUD, so all the different currency pair between those currency, meaning the Australian against all these other major currency. If I go back to the yen, I will have the yen against all these other currencies. Now, as we have a yen that is strong across the board, let's make a little round of the different currency pairs to look at what's happening in the charts using price action and the technical analysis provided by the scanner. We start here in order by the Australian yen. As we can see here, the Australian is at minus 5.5 and the yen is at 6.5. So we have a very strong currency against a very weak currency. So I can see here that I can either sell or buy. Obviously, if I have a very weak currency against a very strong currency, and I'm expecting the trend to follow and mark new breakouts, the opportunity would be rather to sell. If, on the other hand, I would be looking for reversal pattern, in such case, I will be looking to go against the trend and buy, which is not our case, but it's also good to mention the different options. If we go back to our pilot window here, we can see that the yen is strong across the board on top of the gray area. And if we click on the Australian number here, then it will replace the Canadian here, and we have the history of its strength and weaknesses. We have the history of the power indicator. As we can see here now, it has also entered the gray area, which makes them both two currencies extremely important to analyze, since they are at the opposite spectrum of the strength. Let's go back to the Australian yen. And now let's see what we have in the chart. This gray zone is called the range. So for the ultimate more or less 4 days, we have the range of the market from the top to the bottom. Within this range, we will identify the trends. The trend appears here automatically as a yellow line, which is going downwards and marking the overall downtrends. Third technical analysis tool are the supports and resistance. The supports are marked here with white lines and the resistances here as yellow lines. It is important to analyze them because the more the resistance are going down and have a regular spaces between them as well as the support in a downtrend, the more healthy is this downtrend. We will have a look at other examples. We can see here that the supports are going down very regularly. Then in this case here, they are getting a bit closer. The resistance here starts a bit equal, then there is a big space and then it's getting shortened. So overall, the trend is not the best. However, it is confirmed that we have a downtrend since the support and resistance are going lower. Let's have a look at another currency pair. Here we have the Canadian at -3 and the yen at 6.5. So it's also interesting. Once again, we have a strong correlation. We have here again the supports marking new lows, the resistance here equal but then marking again new lows. We have a downtrend that is clearly identified within that range. We continue with the Swiss yen. We can identify a downtrend here with the resistance going down, the support as well, but we have no downtrend. And why is that? Simply because we have a Swiss that is strong and a yen that is strong. And we will avoid analyzing and trading two currencies being on the same side of the strength meter. Why? Because we simply don't know if one of them will lose a bit of its strength or the other one will gain strength. Then in such a case, we can have very strong volatility, very strong reversal. So to put all the chances on our side, we'd rather always trade a weak currency against a strong currency or a strong currency against a weak one. And we continue here on the euro yen. As you can see, both of them are yellow. Although we have a downtrend here, we would rather avoid it because the euro can continue its trend, and we can verify that with the matrix indicator. Let's have a look now. We click here on the number, it will replace the Australian. As you can see, they are both on the same side, they are crossing. The euro is losing a bit of strength, but suddenly it could reach the yen, and in such case we would have a strong currency against a strong currency, which is not the best to trade. Let's continue. After the euro yen, we have the sterling yen, which is also at +1, so we will leave it for now. The New Zealand yen is different. We have a New Zealand at -2 against the yen at 6.5. Again, the supports are going down, the resistance are going down. We have a good downtrend here that is formed within this range. So overall, we have a healthy downtrend. And we will finish with the dollar yen, which also has a strong downtrend with support and resistances going down. But there is much more than just support and resistances. As you can see here, we have some bright yellow line and some gray line. Those lines represent the lock candle. What is the lock candle? This is what I will explain you in the third episode. Until then, happy trading and bye-bye.